Hello and welcome to KYC. I am Sharad Dubey and with me is Varsha Chandani, and today this company which will be in focus in our special show KYC is PTC India. This is actually a less tracked stock also amongst the analysts, but we at NDTV Profit will be tracking this stock, and of course the KYC, we get this company in, there are certain questions we need to ask, and of course the most important question is this: why are we getting this company? First of all, the reasons. Let's just see what we actually want to know, whether we had a discussions. So what will be the transition for the renewable energy space? That is something which we'll be looking out for. And of course, the company itself deals in power trading. Varsha will be getting us more details. But let's move on to other reasons also why PTC India is in focus. Will the market coupling be beneficial? That's a very important trigger point because it is holding stake in exchanges as well. Now, will the power trading market deepen? That is something which is very important as an industry, as more and more power requirement is coming in. So power trading is something which we'll be looking out for. And the last one is, what will be the synergies for the cross-border trade? Roughly, it's around 17–18% of revenues right now, but will that go up? Our neighboring nations, they will be in focus. But Varsha, quite a technical company, and of course, we scratched our brains on the company and the entire KYC show. But just give us to our viewers, what are the views about the company, what it actually does in market coupling? It's a very technical thing. So if you could just break it down for our viewers.
Sure. So let me start about what does this company do. So they are into power trading business basically, and they undertake long-term trading and short-term trading of power. They have achieved trading volumes of 82.75 billion units in FY25. And they also do cross-border trade with Nepal, Bhutan and Bangladesh. So I would say they're just a broker when it comes to power trading, and they also deal in long-term and short-term trading. Short-term trading normally, when there is surge in demand or when there is, short in supply, so they come up and do that short-term trading power. Now, talking about the revenue split, the solution for generator and utilities contribute almost 82% to the overall business. Cross-border trade have almost 18% contribution to the overall business, and rest is from consultancy and advisory services. Now, a lot has been in market about market coupling. Now, what does market coupling mean and how this is beneficial to companies like PTC India and negative for IEX, I would say. So what is market coupling first of all? So basically, what happens is market coupling fundamentally changes how electricity prices are determined on exchanges, on power exchanges. For example, each power exchanges act as an independent entity for price discovery in segments like day ahead market. Exchanges like IEX, HPX and PXIL run their own auction process. So they collect all buy and sell bids on their platform and use an internal algorithm to find a single price that clears the maximum volume of power. Now, because IEX historically, or rather IEX has a huge market share when it comes to over 90% in spot market, it offers highest liquidity. So price discovery is very easy when it comes to IEX because there are a lot of buyers and lot of sellers. So there's lot of liquidity, lot of volume, and price discovery is easier when it comes to IEX. And IEX, because of that price discovery and lot of buyers and lot of sellers, there's a network effect, and IEX offers a very cheap price, I would say. So this liquidity acts as a magnet and ensuring the price discovery is often most referred and trusted. Now, because of market coupling, what will happen? A centralized market coupler like Grid Controller of India will run a common algorithm on the combined order book to determine one single price. So the price discovery which used to happen on IEX will no longer happen, and there will be a uniform single price discovery which will be determined by centralized market coupler. Now, why this is negative for IEX? Because this reduces IEX pricing power. That IEX was basically known for a price discovery mechanism. Now that no longer being there, this will impact IEX market share. Now, why this is positive for other exchanges? Because now the moat for IEX will no longer remain, and the volumes will shift to other exchanges like HPX, which is owned by PTC India also. So basically, in short, market coupling is beneficial when it comes to companies like PTC India, because they have a 22% stake in HPX, which is in power exchange. So overall, so this is what PTC India does. So PTC India is nothing but a broker when it comes to power trading, long-term power and short-term power. The next growth driver for this, if market coupling happens, it's if market coupling happens, yes, company will be benefited. We need to just analyze how much market share will this company gain overall.
Well, that's a very pretty interesting take on that, Varsha. But coming back to our show, the format, there are 8 parameters where we'll be judging the entire company. Let me take you through all the parameters one by one. Income statement, balance sheet, cash flow, return ratios, we'll be judging them on the numbers. Also shareholding numbers, street cred, which is nothing but your stock tracker across various time periods, we'll take that into consideration, and of course the valuations and what the company's outlook is. Based on that, we will be giving our overall analysis. To start with, income statement is something which we'll be watching out for, and Varsha, the Q2 numbers are also out, right?
Yeah, exactly. So overall, if you see, the Q2 numbers are good. Talking about the first, let's see how the trend has been. So overall, if you see, the 3-year CAGR has been in -1%, but look at the net profit. Net profit has been, the 3-year CAGR growth has been 21%. Now, there are major 2 reasons for this. One is lower interest cost, and the other is, lower tax have aided profits, and that's the reason you're seeing almost double-digit 21% CAGR growth in the last 3 years. Overall, if you see, the margins have been on the decreasing trend. So, just on the margins, if I were to talk about in FY22, rather from 2020, if you see in 2020, the margins were 10%. Fast forward to 2022, came back to 9%, and now it is 7%. So we need to, ask the management whether they'll come back to their, 9 to 10% of margins, or 6 to 7% is the new normal, when it comes to PTC India. And one of the reasons why you're seeing that negative EBITDA growth also. But overall, onto the Q2 numbers, overall a good set of numbers. The revenue growth was almost 12% year on year, EBITDA growth was 19%, and net profit growth was -5%. But overall, we would give a neutral rating to the company, considering the 3-year CAGR trend for the company.
Well, that's pretty interesting on that. Balance sheet, it's a very simple analysis. You see the cash bank balances, that's on the higher side, 3,274 odd crore rupees, and the borrowings number, look at that, significant reduction coming in when you see these 2 data points. So from my side, it will be a thumbs up for this rating.
Yeah, talking about cash flow, so overall a thumbs up when it comes to cash flow, because cash flow from operations, is pretty much at 2,132 crore, which is not that bad. From in FY24, it was almost 2,451 crore. So overall, CFO to PAT also, it's like 218%, and net cash flow stand at around 835 crore when it comes to FY25. So not an bad numbers per se. So that's the reason we have given a thumbs up when it comes to cash flow.
Well, that's pretty interesting on that front. Return ratios, there are some trends emerging. It's on the higher side, but the way the growth has happened, that is something which you'll be looking out for. The capital base increase is also there earlier, so there are some adjustments as well. Because of that, I have given a neutral rating for the ROCE numbers.
Talking about shareholding pattern, let's see what's happened there. So promoters' share has been at 16%, which have not changed since March 24. FII's though is 29%, though there was a dip in March, 25 to 26%, but that has resumed back to 29%. So nothing negative there. Even DII stake has been at 7%. So that's the reason we have given a thumbs up. Nothing negative as of when it comes to shareholding pattern.
That's pretty interesting on that. Moving on to our second last rating parameter for KYC. The street cred, not much returns coming for the shareholders in the short term. 1 month and 6 months, you just have a look. It's in single digit, be it positive or negative. For year-to-date basis, it has given 16% return to the shareholders. 1 year basis, the stock is flat. But on a long-term basis, it has been a multi-bagger, 226% returns coming in. So for the shareholders on the long-term basis, it is a good sign. But overall, last 1 year or so, the stock hasn't moved up much. And of course, that major overhang is something Varsha had mentioned, market coupling. This news flow is out already. It's almost 6 months, you could say. And that is why that overhang itself is also there for the stock for not going up. So it's a neutral rating coming from my side.
Talking about valuation, let's see the trailing PE for this company is at 6.5 times, and we have seen a lot of correction, corrects 50% from high, but still there are some uncertainties when it comes to market coupling and all those things, but overall nothing expensive when it comes from valuation. So that's the reason we have given a neutral rating considering 6.5x trailing PE.
That's pretty interesting on that. But our last but not the least, our rating is on the outlook front, PTC India. Of course, the first important thing is the market coupling news flow, which we have been stating all around our show. But the deeper development in the power trading, that is also something which I had spoken about. As in, when we see these markets deepen, more new products come, and more new products come, the ancillaries, they start benefiting. That is why you need to understand the main commentary of the company, and we'll be getting the guest shortly as well. Long-term PPS to renewable sector. That is something how the company is going for transitions, where will be the push coming in, and of course we know the government is pushing towards renewable sector as well. So these benefits would definitely kick in. Cross-border trade with Nepal, Bhutan and Bangladesh, we had discussed earlier, that's coming between 15 to 20% revenue contribution also, and that's pretty much important as well. And short-term market, introduction of this short-term market, basically this is power trading but on a smaller options contracts coming in. So that is something which you'll be watching out for. And lastly, of course, the green energy transition. So most of these factors are positive, but they are very far-fetched. Because of that, I have given just a neutral rating on that. But Varsha, let's revise the ratings once over for our audience, what actually this company has done and what we have given. Income statement, largely neutral, decent set. Balance sheet, we saw the borrowings, the cash, these are the two important factors. Cash flows has been good, as you had pointed out. Return ratios, not much, we have kept it neutral. And moving on, we see the shareholding pattern, the institutional participation coming in, a good thumbs up. Street cred, for long-term investors, yes, but short-term investors, no. Valuations, okay, correction is there of 50% from its highs, but there is an overhang in the stock, and that's the overhang in the outlook which we have mentioned. But overall, 5.5 out of 8 in the KYC ratings we have given, and it's largely on the higher end of the averages generally when we give to the KYC companies. Also, now let's decode this entire earnings, all the business outlook, and joining us is Manoj Kumar Jhawar. He's the CMD at PTC India. A very good afternoon to you, sir. And and sir, first of all, the question remains is the entire market is asking is about market coupling. Your investments are there, and there might be a re-rating for the stock if this market coupling announcement comes in. First of all, if just to simplify it for our viewers, how will you be the beneficiary of this, and going ahead, any kind of numbers if you can give, any incremental if this happens in terms of market share?
There are two things. Number one, the market coupling is likely to benefit the other two exchanges beyond this traditional dominant stock exchange, power exchange, which is IEX. So the beneficiaries of the coupling are likely to become the HPX and the PXIL. Since we own almost 22% equity in the HPX, we will be an indirect beneficiary of this whatever benefit accrues to the HPX. That is one thing. Second thing, currently, since we are promoter of the HPX, we are not doing any trading on the HPX, but we are in discussions with the authorities. We have filed petitions before the concerned authorities to allow us trading on the HPX also. So should that happen, I think that will be, beneficial for the PTC itself. So these are the two things which I see happening. Now, market coupling has to be become a practice from January. So we are hoping and expecting that it will expand the trading markets and better volumes, as well as more share of the HPX is likely to benefit the PTC stock.
Understood. Hi, Mr. Jhawar. This is Varsha this side. A pleasure to have you at NDTV Profit. I understand, sir, that monopoly is actually not good for the market. But considering the dominance presence of IEX, are do you think the competition still has that technology advantage that you could actually have those technology capacities and technology advantage to go for trading when it comes to
100%,
HPX?
100%. There is absolutely no doubt about that. Number one, our technology partner is Bombay Stock Exchange, which is a proven stock exchange. And the technology front, all our clients, whosoever are trading with us, have got absolutely no problem whatsoever. Only thing is because of this networking effect in the DEM segment and in the RTM segment, all volumes traditionally go to the leading exchanges, and that is the situation all over the world, that where the buyers are, sellers would go, and where sellers are, buyers would go. So it is, I mean, a self-fulfilling cycle. Now if there is a coupling, then the buy and sell side of the contract, anyone can place bid on any exchange, and the price will be discovered at a third neutral platform. So I see absolutely no reason that why this HPX technology would fail anyone. It is a good technology, it is a proven technology. I see no challenge on that front whatsoever.
Now, that's a pretty interesting take on HPX. That means you are ready to challenge the larger players also when it comes to the technology front. That's a very
Absolutely,
important.
absolutely. There is
That's a
absolutely no doubt about that.
that's a very important statement coming in from the management. But margins front, let's get back onto the numbers. And the street really wants to know, there has been a pressure in the margins coming in. Will this margin outlook, kind of bottom out going ahead, say in the next 8 to 12 odd months? And if yes, what would be the trigger or what would be the key factors for this? Or will we see the margin pressure still sustaining until and unless this overhang of market coupling doesn't go away?
No, actually, I mean, this margin is not really dependent upon only upon the market coupling, which is a side development. Margins in the trading business, power trading business, are determined by many factors. One is the seasonal availability, demand, and supply dynamics. So you see, during the rainy season, there is a lot of hydropower available in the market for trading, and since those contracts are typically long-term contracts, so margins are usually very good in the long-term contracts, and if the volume coupled with the per unit margin gives a good return during the rainy season. But then this is a seasonality. So what I see is that margins shall remain stable, but volumes are likely to grow. Why I say that? Because I mean, overall, if you look at the power scenario of the country, the demand growth in the overall energy demand has not been that much, and that means there is an easier availability of power, and the rates of the power being traded are consistently a little bit lower than what they were 1 year earlier. For us, the absolute rate of the power does not matter. For us, the trading margin on that traded power matters. So for us, it has been a stable situation, and if the rates of the power are low, then we see that the volumes really go up. So for us, that is a good development, and that is why I see that in terms of per unit margin, it is likely to remain stable. And in terms of volumes growth, we see a good growth coming in, and we are likely to maintain that momentum.
Sir, actually what Sharad meant was there was a time when you used to enjoy 9 to 10% of EBITDA margins, if I'm not wrong, back in 2021, 2022. So are you saying that this 7% is the new normal EBITDA margin that you're going to see for next, at least for medium
Varsha,
term?
that was an aberration of the COVID period. If you understand, at that point of time, all the physical, I mean, activity in the power trade markets was at an ebb, and we were largely a very big beneficiary of entire digitization of the power markets. But that was an aberration. If you see, then our, I mean, growth is in the range of 7 to 9%, and I see that being maintained. That much I
So,
can say.
understood. So 7 to 9% is the margin trajectory that you're seeing. Also, sir, if you could, guide us when it comes to trading volumes, because I heard you saying that you're expecting a good spike in volume. So, what is the trading volume growth expected for, the rest of FY26 and FY27?
You see, the overall power demand in the country is likely to grow by 5 to 6% per annum. That is what I expect. And the short-term trading or overall trading market is likely to go a couple of points more than that. So that is what I would see. And since we are a dominant player in the trading space, a lot of that is likely to come to us. So I would say that anything more than 7%, 8%, I would be happy.
Well, that's a pretty interesting take on that front. But speaking of the cross-border electricity business, that is, we are having our neighboring nations, and almost 15 to 20 odd percent of revenue also comes from this segment. Give me in details, what's the growth outlook looking like for this? We have heard a lot of, energy agreements being announced as well in hydroelectric segment, and even some in thermal also when it comes to agreements. But what is your view and the growth outlook for this segment of your business?
There are three things, and basically there are three countries with whom we are having a power trading relationship: Nepal, Bhutan, and Bangladesh. If we take one each one separately, so in the Bangladesh, we are currently utilizing our transmission corridor to the full. So there is, I mean, no potential of further growth of that market with the Bangladesh. We are currently supplying around 200 megawatts of the RTC power to the Bangladesh, and I do not see that going up. Uh, Beside other things, there is transmission congestion also. With Nepal and Bhutan, there is a tremendous potential to grow the trade, overall power trade. PTC would be a part of that journey also. Up till now, we have been largely importing the power from Bhutan and Nepal also. But now, during the winter season, when there is no hydro generation, we are into the business of supplying them power also. And I see that trend growing because there is a seasonality and there is a complementarity. So whenever opportunity arises, we sell them power. Whenever opportunity arises, we also import the power, and we are a dominant player in that market. So with Nepal and Bhutan, I see growth happening. Both the countries have got very big and ambitious plans about further development of their hydropower potential. So, but these projects do take a lot of time in commissioning. So I would not say that immediately you can see anything, but gradually the trajectory is very clear that these two countries are likely to grow their hydropower potential, and that means a lot of trade would increase with these two countries.
The renewables, sir, considering renewables forming a rising share when it comes to India's generation mix, are you exploring green certificates or carbon trading linked services to enhance the margins and your current contribution from renewables?
You see, renewables, I mean, whenever any energy is being sold, so there are two markets. One is the GDEM market and another is the DEM market. And whatever energy, I mean, we are trading a lot of that is green energy also. So that is one thing. Regarding this RE certificate, we are already deep into that market. We do provide these trading services to our clients, and right now I am not having the number, but that is a decent number that we already provide the RE trading, RE certificate trading services to our clients.
Pretty interesting take on that RE front and your important views coming in, especially for the technological readiness which you have stated in our show against the largest player. Thank you very much, Mr. Manoj, for taking out your time and giving the views for PTC India and the growth outlook going ahead. But let's revise the entire show. What are the three important takeaways coming in? And Varsha, very big statement coming in KYC. Market coupling, HPX market share is expected to increase from 1st January. But another statement is very important, is that the company is technologically very strong for market coupling. And interestingly, BSC is the technology partner for the company as well. And overall, the volumes are likely to grow, but nothing much on margins. Margins are likely to be stable. That means from the historical numbers, it will be on the lower side. So this is very important statement coming for the company, and HPX, as we know, they are holding 22% stake in the company, and that is where most of our conversation was there in KYC. But we have got the gist of the entire conversation at KYC. That's all, folks. Thanks for tuning in to KYC only on NDTV Profit.